Hello and welcome to Morning Brief Market Sunrise. It's Friday, 14th November. Coming up on the show, some of the biggest tech names are falling sharply in the pre-market. I'll tell you why. A big surprise from the White House. Trump wants to cut some tariffs. And of course, we debrief Yahoo Invest 2025. So grab your coffee and let's own the morning. Before we recap on yesterday's mega day that was Invest 2025, let's look at the stories hitting the headlines this morning. Bitcoin, Tesla, Nvidia, SoftBank, all deep in the red in the pre-market. They all fell sharply yesterday too. In fact, Thursday saw Wall Street's sharpest sell-off in over a month. And guess what? Futures, well, they're pointing to another nervy trading session. So what's behind these moves? Well, first, investors are losing faith in a December rate cut. In recent days, a wave of Fed officials have delivered more hawkish commentary, and though the end of the longest ever government shutdown in US history ended yesterday, questions still remain as to what data will end up being released and in what form. On top of future Fed policy, concerns over sky-high big tech valuations are feeding into the existing worries over a potential AI bubble. Now, something that seems to have come out of the blue, President Trump is readying some substantial tariff cuts. He's looking to address high food prices. Remember, just last week, Democrats had some pretty significant electoral victories where candidates stressed affordability concerns. Now, Trump has unveiled framework agreements with Argentina, Guatemala, El Salvador, and Ecuador to reduce tariffs on common grocery items. His administration expects retailers to pass along any benefits to the consumer. And finally, two more tech stories to watch. First up, Apple. Sales of iPhones in China rose 22% from a year earlier, level in the first month after iPhone 17 series was launched. That's even as the broader market softened. And back to AI and Samsung, the Korean firm this month raised prices of certain memory chips by as much as 60%. That's according to Reuters. Those chips are in short supply due to the global race to build AI data centers. Well, as promised, let's recap on what can only be described as a huge day for Yahoo Finance Invest 2025. As 2026 fast approaches, there are many questions investors wanted answering, with the US stock market trading not far from all-time highs, driven by some pretty substantial investments in AI on one side, but with growing worries over the state of the economy on the other. Well, so what's going to happen next? Well, our executive editor, Brian Sozzi, joins me now. Well, I'm giving you a bit of a challenge here, Brian. How best would you summarize what we learned yesterday?
It was a mind-blowing day, Ramzan. That's how I would summarize Invest here for Yahoo Finance. But I have three hot takes that I've been thinking on really the past 12 hours. And you mentioned off the jump, Ramzan, this sell-off we're seeing in tech. I got a note from one of our Invest guests, Dan Ives, literally seconds ago, saying AI bubble talk is in fact causing this sell-off. I thought the comments we got from Mohammed Al-Arian, Chief Economic Advisor at Allianz, were very interesting. He called what we're seeing a rational bubble. And in rational bubbles, I think you're going to get pullbacks like this when you see concerns about Nvidia revenues. They report next week, start to percolate. You see a Michael Burry take a short position in a major name. So again, the concerns seem warranted. But again, I didn't hear panic, Ramzan, from a lot of the guests that I talked to on AI yesterday. By the same token, also didn't hear panic on all things crypto. We had Michael Saylor, the Bitcoin king. We had Eric Trump, Asher Ganoot over at Hut 8. The bulls have dug in on crypto. I think the sell-off might have a little more to go. However, the bulls that have been long-term bulls on this industry are not looking out for the next day's price moves. They're betting on this industry for the next 10, 20 years. So they are dug in there. And last but not least, you also mentioned at the top, Ramzan, this thought that, or concern that we may not get that rate cut at the December 10th Fed meeting. We talked to Mohammed Al-Arian, like I just mentioned, and then Lael Brainerd, former Fed vice chair, about their outlook for rates. Both of them really brought up a good point that the low-income consumer remains under a lot of pressure here in the United States, and a rate cut sure seems needed.
Now, I know you also spoke to Alexis Ohanian, the co-founder of Reddit. He had some pretty interesting things to say about jobs and AI.
I think Alexis he admitted, Ramzan, that he's a techno-optimist. So he sees things through the prism. I mean, he co-founded Reddit, which is just a tremendously popular platform here around the world. But I think for Alexis's vantage point, AI, of course, is going to impact the labor market, but it'll also help people be a lot more productive. And he's putting a lot of money to work in the software space, trying to bear out that thesis.
Brian, it's always a pleasure to talk to you. Thanks again, and good luck getting some rest this weekend after Invest 2025. Okay, now you can binge watch all our best videos on the Invest page on yahoofinance.com in case you missed anything. But for now, here's a small taster.
All these things we've been saying for 20 years, and you know what? They pissed off a lot of people in the league. I run into people all over America and quite frankly all over the world. People who have like normal means who are now rich because of Poundry.
The math is pretty simple. We expect Bitcoin to appreciate about 30% a year for the next 20 years. There's no doubt in my mind Bitcoin will be a larger asset class than gold by the year 2035.
It shook us all to the core because fans need to trust that they are seeing real-time competition and that the outcomes are fair.
It was 9 p.m. in that AI party. It's now 10:30 p.m. But that party goes to 4 a.m.
There are elements of a bubble, which means that people will end up with losses. But the aggregate value of what's being created is significant. It makes sense to take a venture capital approach to AI. The payoff is so large that it is rational to have multiple investments and to overinvest.
The economy at the top level is strong, but again, it's being driven by this really important set of investments in AI. The rest of the economy under the hood is really stuck.
Government's going to change, tariffs going to change, leaders going to come in and out, and various other things are going to happen. You can never put all your eggs in one basket. That's always been the rule.
Vaccines have saved the world and will continue doing that. In the long term, it's the most cost-effective medical healthcare intervention.
We make an investment, and the management team, the day after we make that investment, I can promise you, they are getting together and they are going to do more than they would have done faster than they would have done.
Most companies, when they think about their business, dealing with retail investors is pretty secondary or ancillary. They're worried about making sure that they're launching products. Our business is inherently different. Retail investors are at the core of not just our investor base, but also our customer base.
We're mining Bitcoin for roughly 50 cents on the dollar every single day, 24 hours a day. We're mining Bitcoin and we're adding it, and we believe this asset's going to be transformational.
Things were looking great. Then all of a sudden you have a shutdown that occurs, something that comes completely out of your control. We can't do business like that. We need more, from our government leaders.
So you heard it from Brian. If you want to know everything about what's next for AI, crypto and the economy, you're in the right place on Yahoo Finance. Well, right, after a short break, we'll hear directly from the president of a tech giant that just reported 4 straight quarters of growth. You've seen it this morning, lots of tech stocks are in the red, but Cisco is still holding up for now after rising more than 4.6% yesterday, and that's off the back of a strong earnings report. So I spoke with the president of Cisco, Jeetu Patel, to ask him how the tech and communications giant has been able to capitalize on booming demand for AI.
Probably the most important pieces were our AI orders. We typically, talk about AI infrastructure and how we're doing over there because there's such a massive build out that's happening with hyperscalers and beyond. And we had last year we had guided for $1 billion in orders. We ended the year at $2 billion, so we were 100% over. And this year, in the first quarter alone, apples to apples, we have $1.3 billion in infrastructure orders from hyperscale customers. So that was certainly exciting, and the momentum continues, and we are there's a lot of innovation going on at Cisco, which is the core foundation of why we're seeing good results.
Looking ahead to the year coming up, is that where the lion's share of your revenue will continue to come from, do you think?
Not the lion's share, because it's still we have a pretty large set of businesses, and in fact, one of the things I didn't mention was we have had a full lineup of our campus and branch networking refresh. And what we're starting to see is that business in the refresh cycle is actually moving faster than the previous kind of refresh cycle had moved as well. So you're starting to see some pretty positive results across the board, not just on the AI infrastructure side, but of course, as you know, there's a massive AI infrastructure build out that's going on all throughout the world. We are engaged in a lot of those areas, and we will continue to hopefully see growth in those areas, plus our core businesses.
Now, Jitu, in most sectors, in most industries, there are winning strategies and losing strategies. What about within AI? What are the winning strategies and what are the losing strategies? What should investors be really careful of?
You know, the way that I think about this, it's overstating the obvious, but it's actually true, and it's surprising how few people do it, is you just can't sit on the sidelines right now, and you have to get enough of an instinct and a texture of what's going on in the market. So when we do studies, what we find is that, you know, there's a large percentage of companies that are starting to experiment with AI, but the ones that are getting the best results out of it are the ones that have been at it the longest. Because this isn't like, you know, the first time you use these tools, it's going to be revolutionary. You have to get good at it like anything else. And so sitting on the sidelines is exactly the wrong strategy. Jump in, experiment, and get your organizations to have a base level of dexterity. Ramzan, you and I have talked about this. There's only going to be two kinds of companies in the world. Ones that are dexterous with the use of AI and others that are really going to struggle for relevance. And so everyone should actually start to get the mileage on the experience.
But some investors might think they've missed the boat, that they might have got in, they're seeing this AI, this growth in AI and thinking, hang on a minute, we're way behind, it's too late for us. But do you think there are some big players out there that are coming?
I always give this analogy, and given the fact that you're from England, I won't give you a baseball analogy, I'll give you a cricket analogy. But if we have a 50-over match, we're in probably, you know, over 2 or 3. So we're in early days still. I feel like we're definitely not too late. In fact, there's a lot of kind of fear of, is this a bubble? Is this going to be too kind of sporadic? You'll always see in a platform shift like this that there's going to be some level of frothiness in some companies' valuations, but the secular shift that's happening right now, and when you start to see the entire industry experiencing a platform shift, I feel like we're in the very early days. And in fact, there is a very plausible theory that we might be underestimating the demand signal, not overestimating it.
So you're not worried about a repeat of the dot-com bubble bursting with AI? You think that we're safe from that?
I think there's always going to be companies that are going to be frothy, but just like in the dot-com bubble, there was a massive shift that happened with the internet. You will see a very, very similar shift with AI, but there'll always be companies that are frothy, and there's going to be a lot of experimentation that goes on. And in that experimentation that goes on, not every company is going to be successful, but what you are seeing is a fundamental momentum that is going to be sustained. I don't think this is going to be a blip that just goes away over time. I just want to look at data centers. I know you're heavily involved in that. Is there enough energy to keep these, grow these data centers that are desperately needed? I think you hit the nail on the head. If I were to think about AI and take a step back, we see 3 major constraints with AI. The first one is the infrastructure constraint, which is what you're talking about. We just simply don't have enough power, compute capacity, or network bandwidth in the world to satiate the needs of AI. And so we have to make sure that actually gets sorted out. There's also another kind of shortage, which is the process for permitting and building out the shells themselves takes a certain amount of time. So there's limits of physics over there as well. Number 2, there's a trust deficit. If people don't trust these systems, they're not going to use them. And so you have to make sure that safety and security become prerequisites for adoption. And then number 3 is that there's a data gap. We have trained these models on human-generated data that's publicly available on the internet. And what we are now starting to find is publicly available human-generated data we're running out of to continue to keep training these models. But the good news is synthetic data and machine data There's still plenty of that. And then every organization has their own proprietary data that'll get these models better. So those are the three major constraints. It turns out, Ramzan, that Cisco happens to be squarely in the midst of helping solve each one of those three. So we find ourselves in a pretty fortunate position here.
And Jitu, you know I ask you this question every time you're on. What's the exclusive for me?
Here's an exclusive I'll give you, is that our pace of innovation is only going to accelerate moving forward. We've probably innovated more in the past 15 months than we have the previous decade combined. And I think this is the slowest you'll see innovation at Cisco over the course of the next decade.
Jitu Patel from Cisco, President of Cisco, many thanks for your time.
It's such a pleasure.
Well, let's take a quick breather now before we dive into Bitcoin with the Executive Chairman of Strategy, Michael Saylor. Welcome back. As we've just discussed, Bitcoin is still struggling well below that $100,000 mark this morning, and crypto companies are also suffering today. One of the biggest names, Strategy, has fallen sharply since yesterday. Still, the executive chairman of Strategy is bullish on Bitcoin. Michael Saylor was on Yahoo Finance yesterday as part of our flagship event, Invest 2025. Here's what he had to say to Julie Hyman.
Obviously, you're a serious guy, right? We've talked a number of times. You think very deeply about all these issues. But then sometimes I look at your X account and I see you posting or reposting these various sort of digitally generated images, AI generated images of yourself. They're a lot of fun, right? Of you, we're showing one of you in a top hat, various Bitcoin paraphernalia, superheroes, etc. Like, you know, I'm just curious how you think about that. Is that, you know, is your Bitcoin, you know, advocacy, is there an element of shtick to it as well? Are you having a little fun with it? How do you think about all of that?
You know, when I was growing up, there were 3 channels on television, and they turned off the television, the signal at like 11 o'clock at night or midnight, and for 8 hours there was no programming. There was no internet. We didn't have, today, we have infinite free music, infinite free television, infinite streaming video, infinite free YouTube. You can get lost, fall in a TikTok hole, an Instagram hole. You can get on stream and Twitch. We have managed to manufacture infinite everything. It used to be you had to have money to get a newspaper or a magazine. And now, you can see we live in a world where we have, to say 1 million times more content would be probably an understatement. So the entire society is being inundated with information, and their attention span has shrunk. And so people just don't have an hour to listen to what you have to say. Sometimes they don't have a minute. Oftentimes I think, you know, should I say it in a podcast? Well, maybe someone will listen to it. Can I say it in 5 minutes? That might be too long. Can I say it in 30 seconds? Sometimes I'll write a paragraph and you think, no, I don't have a paragraph. People will read the first sentence, and then I write the sentence and I think people aren't going to read to the end of the sentence. And so the thing you learn from social media is you need to get to the point. So how about tell me what you want to say in 1 second? And the cliche is a picture is worth 1,000 words. And so sometimes I don't give you 1,000 words because you would lose 99.9% of the audience. In fact, I would say you'd probably lose 99.99% of the audience. If it took 1,000 words, show me the picture, and that will go viral. And you're doing people a service to give them an idea that travels 1 million times faster, that is 1 million times easier to digest, because people just don't have time. They're busy. They're being inundated. And when you see those images, that is us communicating something cheerful, constructive, useful, perhaps profitable to someone. But, you know, like if someone says, hey, I wrote a book on this, here's the book, do you want to read it? I mean, how many books can you read? You know, literally every book written in the history of the human race is available for free to you right now. Do you really want someone with a good idea to give you 250 pages and tell you to read it? Or do you just want them to boil it down to 1 sentence, 1 tagline, or 1 picture? Because I'm like, show me the picture. Okay, got it. Now I can move on with my life. Thank you.
You're making a lot of sense to me, Michael. Stay with us for a second. Let's bring in our social correspondent for the day, Yahoo Finance's Ali Canal, with some of what she's hearing from our online audience during this interview. Ali.
Yeah, well, Brian, Michael Saylor just talking about infinite content on social media, which is the perfect segue since we are talking and taking your questions on social media. Plenty of viewers chiming in, and starting off with a strong one here, Michael. First question, do you see Bitcoin catching up to and surpassing gold's market cap by 2035? What say you?
I do. I think we're in a Bitcoin. We're in the digital gold rush, and 2035 is the 0.99 year. That means that 99% of all the Bitcoin will have been mined in the year 2035. If you want Bitcoin, you need to get it between now and then, because the last 1% of Bitcoin comes out over 100 years. There's no doubt in my mind Bitcoin will be a larger asset class than gold by the year 2035.
And another social viewer wants to know, why should an investor buy strategy stock instead of a Bitcoin or spot ETF?
Yeah, if you don't want to take any counterparty risk, and if you have a long time horizon, then you should probably buy the Bitcoin because you can take custody and take it anywhere in the world. If you simply want the asset, you want it in a brokerage account, you should buy the ETF like IBIT. It's going to take you 10 seconds to do that. It's easy to borrow against it. If you're a believer and you want amplified exposure to digital capital, and also if you believe in digital credit, like our mission at Strategy is we want to give 1 billion people a bank account that pays them 10% tax deferred. If you think that's a cool idea to give someone in Japan or Europe or Switzerland or New York City a bank account that pays them 10% with no volatility, and if you think that Bitcoin can power that, then you're buying our stock because we're a digital credit factory. And if you want to outperform Bitcoin and you're ready to get on the roller coaster, you should buy the equity. But if your time horizon is less than 4 years, if you need the money back in 4 weeks or 4 months, then you probably want something principal protected. You want low volatility. You should buy a credit instrument. Like STRC is literally designed to get the vol, down. Right now it's 7, whereas Bitcoin's vol is 45 and Strategy's vol is 65. And if you want something that's going to be extremely low vol, you should buy a credit instrument like a treasury credit product like STRC. You'll outperform your money market. You might very well do as good as the S&P index, but you'll be able to buy it and sell it and get your capital back, in a month, in a quarter, in a year, and you don't have to, worry about the roller coaster.
Okay, that's all we've got time for on Market Sunrise today. It's a quick look at where Wall Street could open when that bell rings, and it's looking like a negative start. Watch out for that tech sell-off. It seems to be deepening.